Are you or people you know getting a little apprehensive with the recent economic news? Stocks are going up, stocks are going down, and maybe you or people around you are starting to panic? Well, keep listening as we detail our plan of action in the midst of all the chaos. Hello, and welcome to the Wealth Minded MD podcast with your money best friends. I'm Dr. Alicia Taylor.
And I'm Dr. Brittany Helford.
And of course, we're here to help you build wealth and make good money decisions so you can create the life you desire with more control over your time.
It's that time of year where residents are graduating, Alicia. And one of the things that I remember doing this time of year is getting my own disability insurance policy.
Yeah, me too. Me too. It's so crazy because I don't know about you, Brittany, but it wasn't something I wanted to buy. It was just something that I knew that I needed. One of the most important things that we should do as doctors is secure our income. And so we need to make sure that our high income as physicians is protected.
Yeah, and most physicians forget this step. They think that they're going to an employer that offers disability insurance, so they don't need their own independent policy. But let me tell you, no one cares more about your money than you do.
And oftentimes residents have access to these guaranteed standard issue policies or special rates and discounts that other people, even outside of training, cannot get. And so you want to make sure that you're going to somebody who can get you the lowest rates possible, as well as getting a tailored policy customized to fit your needs.
And Alicia, I found that PKA Insurance Group, Pradeep Otto, and Matthew Peterson, who are independent brokers and focus on disability and life insurance, have provided exceptional customer service to ensure that your policy is customized. They look through every single thing, and I really appreciated that there was no lapse in communication. They would allow me to ask questions and provided me with options from different carriers, and were really focused on what I needed.
Yeah, and they were efficient, honey, because look, I am busy. I do not have time to sit on the phone and do 20 Zoom calls. And so, one of the things I really like is that if you're healthy with limited to no medical issues, approval is likely in 5 minutes.
Yes, there are discounts, as you mentioned, on disability coverage, and they can range from 10 to 40%, depending on your situation. So, if you are someone who's not gotten their own independent disability insurance policy, then please reach out to PKA Insurance Group to discuss your disability or life insurance needs today.
Yep, and that's www.pkainsurance.com or call 1-800-258-1018, or you can email info@pkainsurance.com. Are you someone who is graduating residency, or maybe you already have your attending job and you are looking for more money? You know you need a raise, you know you want a raise, and now is the time to get that raise. All right. Most people are submitting their budgets for the new fiscal year around this time. And guess what? We've got you covered.
We have our accelerator, Negotiate Like a Boss, that will teach you step by step what you need to do to get to your desired salary, have the time, flexibility, and the schedule that you desire.
Yep. So you get access to our framework. We're going to give you the skills you need and equip you with the confidence in order to get that raise. And so if this is something that you are interested in, click the link in the show notes to sign up on the waitlist, or email us at wealthmindedmd@gmail.com.
Alicia, oh my gosh, there has been so much going on in the world. I don't know how you feel about your life and how you're making decisions, but I feel like it's giving me a bit of pause and considering, okay, what are my career moves? What are my money moves? So, how are you doing over there?
I am doing fine, although I will tell you what's going on in the climate and the government is really a little bit kind of starting to affect my career. I don't know if I told you this before, but my dad works for the Department of Defense. He's one of their auditors, and he got that email like a lot of people got a few months ago from Elon Musk about tell us what you do, or, you could potentially get fired. And so it was really interesting to see. He still works for the DOD, but it was interesting because I was like, oh, wow, that email really did go out, and it is affecting people who work in the government. For me personally, I think I had mentioned before that I spend a lot of my time doing research, and part of my research and my salary is actually indirectly funded by NIH. NIH gave money to my institution for several initiatives, and they use that money to pay a portion of my salary. Each year, I usually go up to NIH, one of their divisions, and I present my research to them. So I talk about what I'm doing research wise, my progression, that sort of thing. It's a pretty short presentation, but it's myself and usually I think about maybe 20 other people that are there. And I had booked my flight, reserved my hotel, and I got an email last week that's like, the meeting's been canceled. And I was like, oh, snap. For me, it just really hit home like, wow, there are lots of budget cuts within the government. There's a lot of uncertainty, especially in the academic world and the research world in regards to reimbursements and research funding and that sort of thing. It's created a little bit of apprehension and chaos over here.
Definitely, definitely. It's impacting my career too, and how we're thinking about how we recruit residents and also how we support them. And it's interesting to say the least. It's keeping us on our toes. Part of this kind of feels like COVID. I don't know if you feel the same way, but the level of uncertainty, the back and forth, the things changing, do this, do that, makes me feel kind of like I did in COVID. It's different because people are not just dying and my health is not at risk like it was at being on the front line, but just a level of uncertainty. So I'm glad that your dad was able to justify his role, I guess. But it is a little perplexing that so many things are happening and so much change and things that, at least in my purview, like the research that you do that is NIH funded, the research that everyone does, it changes how we move forward in the world. It changes our global competitiveness and it changes technology and the medical advancements that we will discover. So I hope that we're able to rectify this. I hope that we can still make sure that people like you who love to do the research that is going to impact the world and how we are healthier as a nation get back to where we were, if not better. So I'm hoping that we will become better because of this.
Yeah. And, even me aside, I think one of the ways it's impacting a lot of physicians or people who work in some of these different roles is that a lot of institutions are now on a budget freeze or hiring freeze where they are not hiring new physicians in certain capacities and in certain departments. And so it's going to be interesting to see how this all plays out. But I know that that means that we need to be even smarter with the way that we handle money, right? We can't control some of the things that are happening, but what we can control is our response to that and trying to make sure that we are at least in a good financial position and are prepared as best we can for whatever might ensue.
Yeah, I wholeheartedly agree with that. And so it's making me pause and think about how am I aligning my spending, being more intentional about how I'm investing. And I'm grateful that you brought this up because I think many of us are feeling this burden and we're having this discussion in small settings and more intimate settings, but just understanding the impact that it's having on all of our lives. So seek the support, do what you need to do. And one of the things that Leisha mentioned is making sure your financial house is in order. At least if you're stressing out about other things, money will not be one of those things that you will be stressing out about.
Yeah. Let's just head right into our financial focus because this, I think, aligns really well with our financial focus, which is we really want to talk about what's happening in the economic markets, right? The fact that it seems like, or at least, as we're recording this podcast, there were several days in which the stocks fell and a lot of people's 401k dropped in value quite substantially. There was a lot of panic, a lot of fear about a recession. And then, of course, President Trump announced that he was removing most of the tariffs. So then the stock market kind of shot back up. And then he announced that he was imposing even stronger tariffs on China. And so the stock market went back down. And so we've had these sharp fluctuations in the market. And I think it has caused a ton of panic. Brittany, have you experienced this in terms of are you panicked? Are people around you a little nervous or are they just cool as a cucumber? What's happening over there for you?
I am not panicked at all because, yes, I know what's going on. But honestly, the way that we invest is for the long term. I am not someone who is looking to use that money now. And I also know that there are going to be fluctuations in the market. And if you pull your money out at the bottom because you're panicked, then you miss the opportunity for the rebound. Remember, it's not about timing the market. So for me, I'm pretty cool. I actually purchased a little bit more. Things went on sale. I like a good discount. But it's really interesting because I was having a meeting last Friday with a resident and I said, "How are you doing today?" She's like, "Well, the stock market is crashing." And I'm like, "Oh," like she alerted me because I had been going from meeting after meeting. So I had not been aware of what was going on. She knows I like money. So I think that's why she said it. But I also found that very interesting because many people base their behaviors, their emotions on what is going on in the stock market and how that is influencing their well-being and thinking about their wealth trajectory. And so for me, I don't feel that it is impacting my wealth trajectory, except for now things are on sale. So it's an opportunity to buy them at a lower cost.
Yeah, I share your philosophy, but it is interesting because I have colleagues who do not, specifically colleagues that are a lot older than I am and a little closer to retirement. And they were definitely concerned. They know that I'm the finance person or the money person too. And so some of them will say, Dr. Taylor, should I take my money out? I'm really thinking about taking this out. I got to retire in a few years. I can't afford this drop in the market. And so it was really interesting hearing some of their concerns. Because, like you, I know what the data shows that the stock market may fluctuate from day to day, week to week, month to month. But on average, when you look over time, it tends to go up. And so, even if you have this dip in the market, it'll go back up. And so, you're not concerned. I'm not concerned. But some of my colleagues who are near to retirement were concerned. It made me think about, would I have a different mind frame or a different viewpoint if I was older and closer to retirement? And I think that that brings about a really good conversation, a really good question of, should you do something different if you are a little bit older, if you're closer to retirement? Should you change the way you invest? And one of the things that's very clear is that those who are closer to retirement, maybe you shouldn't take on as much risk, right? Maybe you have a smaller percentage of your portfolio and stock-based index funds, and you have a little bit more bonds and things like that that are much more stable. Maybe some of those people weren't doing that. I'm not quite sure. But it is interesting for me trying to navigate conversations with people, and they're like, should I pull my money out? And I'm like, no. So just curious, how would you navigate that question if somebody had asked you that?
Yes, I would just tell them to be patient. And I think it's really difficult for us to be patient in this time. And honestly, the media, they don't do us a solid at all. They are not helping the situation at all. I watch the news only in my patients' rooms, which I should probably be paying more attention to heart sounds than watching the news, but it is all negative. It is all negative. Intentionally, I think, because it makes us want to consume more media by telling the negative slant of it. But it would be different if people would have said, okay, the stock market dropped, so things are on sale now. If you got some extra cash, then this is a buying opportunity. Oftentimes we focus on what we're losing or focus on what we lack, and we miss the opportunity to see what we actually have. So for those people who are really concerned, I would just say, let's just hold on for a second, right? We don't want to make rash decisions in the way that we're just allowing our emotions to lead us towards making a decision that we don't desire. Take a moment, pause, be patient, and let's see where things are headed. Maybe give it 5 days or so. Maybe give it 10 days, give it a month and understand that. And then I would like to bring them back and center them. Okay, so you have this money that you want to use for retirement. What other buckets do you have? How is this allocated? So instead of maybe making a decision, this is an opportunity for us to get acquainted with our finances so that we can understand what led to this, how we're feeling about this. And if we're feeling this way now, how can we protect ourselves from not feeling this way in the future? And so for someone who is going to be retiring in 1, 2, 3, 5 years, do you need to reevaluate your asset allocation so that you can put in these areas of protection, these layers of protection for you?
Yeah, I would agree with that. And I think that what you said is important for those of us who are not even close to retirement. One of my general philosophies about where I allocate money, because sometimes I'm asked this, Leisha, I'm saving up for a house, I'm saving up for a wedding. How should I invest my money? And my general advice to people when they ask me that is I say, okay, I tend to view money based on when I plan on needing it or when I think I'm going to spend it. And for money that I need in the long term, I for sure invest that. And I invest that according to my investing plan. Right now, it's around 80% in stocks, 10% in bonds, 10% in real estate. That's kind of my allocation right now. And so any money that I need in 10 years or more, that's kind of how it's invested. Money that I need in the medium term, I invest a little bit differently. I'm not willing to take as much risk. And so it's not as much in stock-based index funds or percentages in there, but I keep a lot more in cash, keep a lot more in bonds because I know I'm going to need that money soon. Specifically, money that I'm going to need in the short term. Any money that I think I'm going to need or use within the next 3 to 5 years, I keep that money in cash. I've talked to some financial advisors who think I'm crazy. Leisha, oh my gosh, I know so many doctors who have $100,000 in cash or $50,000 in cash, and that's crazy. That money should be invested in the market. And I always tell these advisors, yes, they need an emergency fund, but maybe they also have large upcoming expenses that they're saving for. And so there's a reason why they have this money in cash. I know me in particular, I don't yet have a home, and that's one of the things I'd like to purchase. So I'm saving a lot more in cash than I otherwise would so that I can purchase a home. I want to purchase a car in the next few years. And so I'm saving, again, a little bit more money in cash than I otherwise would so that I can purchase those things. And so if you're listening and you also can name a few things that you know you're going to need to purchase within the next 3 to 5 years, then maybe this is a good time to reevaluate where that money is stored. You don't want to have it in a regular savings account making no interest, but maybe you put that in a high yield savings account or in a money market fund so that you can make sure that your money is safe and growing at a steady pace and is there when you need it.
I agree with that. And so when this time of uncertainty comes, then people like to make major shifts. Instead, what we're advising you to do is to get a real understanding of where you are, what your priorities are, and what are some of those upcoming expenses that you will have to pay for that you need to create a strategy for and stick to the strategy. Because ideally, knowing that things are going to fluctuate, we're going to have these unexpected things that are going to come up. We're going to have stock market changes and shifts. And you want to be able to create a financial strategy that can weather those storms. And that's what Leisha is talking about. So if you know that you have this upcoming expense that you want to ensure that you got the money for it, then you want to protect that bucket of money from all threats. And that's by putting it in a money market fund, but not having it invested, just sitting there so you can earn a higher level of interest, or in a high yield savings account of some sort so that you can earn high yield interest. And you understand that it's growing at a lower rate and you are accepting that because that money has been earmarked for a different purpose, is not the same type of money that you're putting into the stock market and investing. And I love that strategy and I like that approach. And it makes sure that we stay consistent and we're not emotional, because the reason why the stock market is crashing and going up is because people are selling and buying too much, because it's all based upon emotion. So we want to not be emotional in our decisions. We want to be strategic in our decisions.
Yeah, I wholeheartedly agree. And it brings me back to this post that I saw on Facebook of somebody not doing that. There was this physician who said, hey, I had most of my money in crypto and in a few stocks. Saw the market was crashing. And so I sold it. And now I think I've lost over $90,000 and it's causing strife in
Woo!
my marriage. And I'm wondering what to do because we were going to need that money. Is there any way to reverse what I've done?
Mhm.
And unfortunately, it's one of those costly mistakes. It's one of those costly mistakes. We all make money mistakes. Some of us make larger ones than others, but this underscores the importance of not panicking when the markets go down and not checking your investments every single day and saying, oh my gosh, it's gone down. I need to get my money out, but holding steady and really understanding that things have gone down in the past. They always come back up, and it's okay to kind of ride this out. And I think that's definitely what I'm going to do, especially because I've seen it go down nearly 20% and then rebound nearly 20% the next day. And so for me, I'm like, all right, it's down at this time. So that means if I invest more money, I'm going to be able to buy those same stocks and index funds at a discount. That means when it goes back up, I'm going to be ready for it, because that's definitely what happened. The market went down and people didn't necessarily expect it to come back up so quickly. And so the market went down. Some people sold their stuff and they said, oh, I got out before it hit the bottom. But then it shot up that quickly and they missed the boat. So now they had to buy those same stocks and index funds again at a much higher price than they otherwise would have. This is an important lesson that timing the market is very, very hard to do. It's not a winning strategy. And you want to make sure that you do not panic, that you don't make rash decisions and take that money out of the market, but you instead leave it in and just kind of ride the wave.
Yeah, that Facebook post, I'm sorry for that man who did that. Unfortunately, I can understand how his partner would be upset. And I think that highlights another key principle of investing in finance about diversification, not putting all of your eggs in one single basket, and making sure that you are diversified in your investment strategy and diversified in your income sources, and thinking about your tax strategy as well in diversification. So if you all are stock pickers, there's nothing wrong with that, but you just want to limit how much you're putting into one company so that your money is not subject to higher levels of risk by that company succeeding or failing. You want to try to diversify that risk by choosing what we've talked about on this podcast, index funds are inherently diversified or some other type of fund that allows for you to distribute that risk in your different types of investments.
Yeah.
All right. Well, Alicia, how are you making shifts? Are you making any shifts in what you're doing given these circumstances?
Yeah, I mean, not investment shifts, right? We talked about how I'm kind of riding the wave when it comes to investing, but there are other things that I'm doing and that I think other people should consider in the midst of these uncertain economic times. Maybe you can't change what's happening in the economic market, but you can do some other things to kind of protect yourself in the midst of these times. And one of the things that I think is really important is to really rethink your debt payoff strategy. When there's uncertain economic times, there's the threat of a recession, people tend to noticeably get nervous. They get nervous about their job security, right? Are they going to be laid off from work? Are they going to have to experience salary decrease? I remember during COVID, maybe some positions weren't fired, but they had to experience this mandatory salary decrease. And so one of the things that people tend to do is not spend as much and start to kind of pay back their debt so that they don't have these mandatory debt payments during these times. And so one of the things that I might change is just rethinking my debt payoff strategy. I paid off all of my private student loans. They weren't necessarily private, but they just didn't qualify for public service loan forgiveness. So one of the things I did was just paid it off. I made a decision. I had the money sitting in the account to just pay off those loans that didn't qualify for public service loan forgiveness. I just wanted to get that done. Didn't want to have these fixed monthly payments, and I wanted more cash flow. And so one of the things that I changed is just paying off debt to increase my cash flow. What about you? Have you paid off any debt? Or maybe, I don't know, you so rich. Maybe you don't have no more debt. I'm not quite sure.
Girl, we got a lot of debt. We have 2 mortgages. We have a lot of debt. I haven't made any shifts. One of the things that I have been considering is just the properties that we have. One, of course, that we're living in, but another one that is a rental property. And what is the value of holding that as a long-term investment versus a short-term cash flow? Thinking about that. And I've done some calculations of what would it look like to sell, doing some market analysis of other people who have sold, who have comparable homes and what they got and how much we paid and all of that. So that's kind of where my head is right now. One of the things that I am considering is just boosting our emergency fund even more than just 6 months and saving a bit more aggressively. So the saving aggressively can be for emergencies, but also thinking about how do we save aggressively for this prediction of a recession. And if the housing market, the mortgage rates start to come down, or now there might be other real estate opportunities so that we can have more cash flow in order to invest in that way. And lastly, just investing in myself. So reading real estate books, listen to podcasts just to understand what are some of the opportunities that present themselves during recessions.
I like that. I like that. I like that you are contemplating, hey, a recession might hit. When recessions hit, usually sometimes things go down in price. Maybe houses go down in price, interest rates go down, and you want to be ready, is what I'm hearing you say. So that, hey, if I see a good real estate deal, I can jump on it. And, I'm doing the same thing and keeping a lot more in cash than I probably otherwise would, more than the 6 months of expenses that you traditionally hear that you should keep for an emergency fund, but just keeping a lot more of that in cash right now, I think is one of the things that I'm doing. Holding off on unnecessary expenses, doing my due diligence to ask myself, do I need this right now? I spend a lot of money on travel. And for my travel, I'm usually paying for that travel with points, or I've already budgeted that in. And so if I've already budgeted it in and have the money set aside, then of course I'm going to take the trips. But if I don't have it budgeted in, if it's a nice to have, but not a mandatory, not something that I had really set my sights on, then I might hold off. I definitely got a couple trips coming up this year. I was thinking about one more. And so we'll see if I can book most of it on points, then to go. But if I can't, then maybe I'll hold off until next year. So that's what I'm really doing, is kind of contemplating any unnecessary expenses and being more diligent with that. I think it's also important to maintain a good relationship at your job. In the midst of these uncertain times and budget cuts, I'm like, let me make sure my boss loves me. Let me make sure that we're on the same page. Hey, how can I be of service? Am I meeting your expectations? Are you happy with what I'm doing? Because I know there's budget freezes or hiring freezes and that sort of thing going on. So making sure I have a good relationship on job. And also, this underscores the importance of having multiple streams of income. Really taking this as a sign to say, okay, Alicia, now is the time for you to not only make sure that your job is stable, but you to also, like you said, invest in yourself and invest in your passions and invest in those things that you've wanted to do for a long time. And for us, part of that is coaching. We love helping other doctors, whether that's helping doctors establish side gigs or helping doctors navigate raises and negotiate well when they come to the negotiating table. I know you and I are launching the next iteration of our Negotiate Like a Boss Accelerator program, where we're going to give you the tools and the frameworks that people need in order to negotiate with confidence and to negotiate successfully. You can click the link in our show notes or email us at wealthmindedmd@gmail.com if you're interested as you're hearing about this. But I think this is the time to make sure that you have other sources of revenue just in case you should need it.
Yeah, I wholeheartedly agree with that. And that's something that my husband and I have been talking about as well, is like, how do we take ourselves out of the equation as far as the revenue generators, right? What are some of the passive sources of income that we can engage at a different level? And I love what you said about evaluating your expenses. That's one thing that I consistently do. You know, I'm frugal by nature, and I wholeheartedly believe that one person's trash is another person's treasure. And girl, I walked down the street the other day and it said free. And I looked right in that box. I got me some nice ornaments for our Christmas tree.
Oh my gosh.
So just seeking out other opportunities to help other people by giving away things that we don't need, just embracing that it might not be new, but a used item, as long as it has the same function, is still worth value. And one last thing that I wanted to bring up is one shift that not necessarily the recession is triggering for me, but just being intentional in who I support. I've definitely been spending less, but also the companies and the brands that I buy from, I've been more thoughtful about that and making sure that as we are feeling the impact of this, there are small businesses that are also feeling the impact. And how can I help them by going directly to their website and taking out the middleman and purchasing? So that's one of the things that I've been doing, purchasing directly from people's websites and not using some of these larger shopping portals, let's say.
Well, that's sort of our advice for you. So if you're somebody who is listening to this and you are thinking, oh my gosh, I'm freaking out, be reassured that your money best friends, right? Doctors Leisha and Brittany said, don't panic, don't panic. Things will rebound and stay the course. Continue to make sure that you are reevaluating your savings, making sure you have enough in cash, maintaining a good relationship at your job, having multiple streams of income, considering paying off debt, and being ready for anything that may come up. And so we want to be your reassuring friends today and saying, it's going to be okay. It's going to be okay. We're going to get through this together, despite what may be happening. As physicians, one of the most important things that we can do is make sure that we secure our income, because a lot of our financial plans are contingent on our high doctor income. One of the things that you will need to do is make sure that you get long-term disability insurance.
Now, Pradeep and his team at PKA Insurance Group have a reputation for putting people over profits and always doing what's best. Do not hesitate to email PKA Insurance and his team today.
They will help you get the insurance you need with the service you deserve. All right, Brittany, I'm curious. Do you have any money mishaps or confessions for us today?
I do. Leisha, not saving enough for taxes. Now, we had this whole episode about how I saved 25K, right, on our taxes. But girl, I was still shocked when I got the final number. On April 15th, we have to pay the taxes we did not pay during 2024, right? In April 15th, 2025. So we have to pay our 2024 tax bill. And on April 15th, we have to pay our quarter one taxes. And I think that the estimate for quarter one, I underestimated. And I told Kevin, and he's like, really? I was like, well, we have the money, right? It's in our emergency fund, but I didn't want to pull from the emergency fund in order to cover this bill. And a part of me is thinking, do I want to pay it, or do I just want to be very strategic about the rest of the year so that our tax bill is less for 2025? And so if our tax bill is less for 2025, if we change our withholdings and some of that other stuff, that would make my quarter one prediction a little bit lower. So do I want to pay less for my quarter one prediction and do a little bit better job? I don't know. I haven't paid it yet. I paid 2024 tax bill, but I haven't paid the quarter one estimate yet. So I'm just thinking about that.
Yeah. Okay. So let's unpack this, because people listening are like, wait, what? Quarter? Huh? What are you talking about? And so for those who have 1099 income in a substantial amount, you may not only have to pay your personal taxes by April 15th each year, but you may also have to pay quarterly estimated taxes, right? If you have a lot of 1099 income, the IRS wants their money as you make it. And so you have to make estimated quarterly tax payments 4 times a year. And so what you're saying is that you're employed and obviously you're married. And so you and your husband had joint personal taxes filed by the April 15th deadline. But then you also got to pay your quarterly one estimates for your 1099 income by that time too. And you're trying to figure out how you're going to do that, right? That's a little bit more than what you anticipated. So are you going to change your withholding, change your estimate essentially, or are you just going to pay it? That's up to you and your tax person, girl. I don't know. I am somebody who does not make quarterly estimated taxes. I mentioned this before that I just have a little bit more withheld from my paycheck at my job. And then when I settle up with the IRS each year around April 15th, usually I have to owe some, but I usually am not charged a penalty on that. I'm usually somewhere within the safe harbor. So even though I owe several $1,000s around the April timeframe, I like it that way where I don't have to make quarterly estimated payments. I can just make one payment around April. So you have a problem that I do not have, honey. And so I am not able to give you advice. That's what you pay that tax strategist for, honey. So you might need to keep her on board.
I need to reach out to her because they just sent me the email a couple of days ago, but then birthdays and everything. So I need to reach out, but I think I'm going to pay less. I don't know. We'll see.
Well, obviously, this episode is coming out a little after April 15th, so you will have decided what you're going to do by the time the people hear this episode. So
Yes.
you will have to update us and let us know what you decided. Did the IRS throw you in jail? Did they hit you with a big bill? We obviously want to keep you out of trouble. And so I'm curious what you end up doing. But again, this is champagne problems, right? You have this tax problem because you and your husband make a substantial amount of money. So every time I'm reminded of your tax problem, I'm also reminded of how rich you are. So I think it's a good problem to have, right?
It is a good problem. It keeps me on my toes, always being strategic about, okay, what actually offers the greatest benefit and what are the things that I must be doing now in order to achieve the outcomes that I desire. And this tax bill is not a desirable outcome. So, yo, girl, I've been thinking a lot. So maybe I need to make this part of your problem. Alicia, I want you to have this problem so we can brainstorm together. Please. Two brains are better than one.
You know what? There might become a time where I have to make quarterly estimated payments, but right now I'm just riding this simplicity wave. Okay. One of the things that's important to me is just simplifying my financial life.
Yeah.
And so if I don't have to make those quarterly estimated payments and I can do it another way, I am going to continue doing that for the time being. But one of the things I can't help you with is spending your money, girl. What are you doing fun with money? Because I'm an expert in that part.
Oh my goodness, you are too much. So, in this episode, I would be back from the trip, but I'm going to the Student National Medical Association annual conference in St. Louis. And so I bought those tickets, I bought the hotels, but I'm also really excited to reconnect with some of the people from WashU in St. Louis. I did my residency there. So I've been reaching out to people. We have dinners planned, and I am so excited, girl. I'm going to go to Pappy's. I know every place I'm going to hit up for each of my meals. I'm only going to be there for like a day and a half. So I might be a little gluttonous during my time there, but I am really excited for this trip.
Oh, I'm happy for you. I'm happy for you. I haven't been to that conference since I was a student in medical school. And
Wow.
so I would love to get back there. It's usually Easter weekend most times.
Yes.
And so
It
I'm
makes
trying
it
to,
a little hard.
yes,
Yeah.
it does for me, especially because I have nieces and nephews, which I'm not sure if I mentioned this. My nephew was born. I love this auntie role. I am so excited. And family's going to get together around Easter. I now have 3 nephews and a niece. And so I got to figure out what I'm going to get these kiddos for Easter. So I think I'm going to get them Easter baskets. I keep telling myself I'm going to be creative and create their own Easter baskets, but I will probably not. And I will probably purchase some pre-made Easter baskets for them with some candy and some cut up fruit for toddlers. So we shall see. But that's something fun that I'm going to do with money is try to create this memorable Easter experience for my nieces and nephews.
Oh, I love that. Girl, my kids get the same Easter basket from the last year and candy from Halloween.
Oh my gosh. Oh my gosh. You know, Brittany, you have too much money to serve your kids expired candy. So we gotta do something different for you.
Candy has an expiration date.
I'm pretty sure it does. Write us if you agree with me because I know that one of us is right and I know that it's me. So I'm a little concerned now about your kids, but I hope that they also have a fantastic Easter as we are recording this and that you all listening had a great Easter as well. And so thank you for joining us this week and we will be back to you again next week.
Hello. Hello, and thank you for listening to our podcast. And because of that, we have something for you, our Wealthy Minds Blueprint.
Have you ever thought to yourself, I wish I could be better with money? Do you want to start investing and saving for retirement, but keep delaying because you don't know where to start? Our Wealthy Minds Blueprint is here to help.
This guide will teach you what you didn't learn in your training so you can stop being confused about money and start taking what we call wealthy-minded action.
We'll help you become a master of your finances and simplify investing so you can get started today. Take control of your financial future by downloading your free copy of the Wealthy Minds Blueprint now and start building the wealth you deserve.
Hello, everybody. It's me, Brooke. I'm recording a little disclaimer for my mommy, Dr. Brittany Halford, and her friend, Dr. Lisa Taylor. Just so you know, they're not financial advisors, tax professionals, lawyers, or financial planners. Everything you hear is for education and entertainment. It's not strict financial advice, you know. So use your best judgment, chat with a tax professional, and all those other people that you need to talk to. Thanks for tuning in today. Keep cruising on your journey to wealth and wellness. Bye-bye.
One of the most important things you can do is ensure you have long-term disability insurance. Long-term disability insurance secures your income if the unexpected happens and you are unable to work due to medical illness, chronic conditions, or an accident.
Unfortunately, all insurance agents aren't created equal. Some of them are so focused on making a sale that they fail to reveal certain necessary information, tell you about discounts available, or clearly explain the process. Pradeep Otto and his team at PKA Insurance Group are different. They have a reputation of putting people over profits and always doing what's best.
If you need life insurance or disability insurance, reach out to Pradeep and his team today. They will help you get the insurance you need with the service you deserve.